Hello and welcome to Insider Week. In this video, I'm going to show you how to use a futures calculator to calculate the appropriate amount of risk and what your potential profit target might be, based on your account size and the amount that you're willing to risk for the trade. First thing I want to do is go ahead and enter my account size. So this would be what my full brokerage account would be that I'm actually using to trade futures. In this case, let's just put $50,000 in as an example. The next thing I want to do is go to my trading software, charting software, brokerage, wherever I can get a chart or a location where I'm going to actually make my trade. Now, I already drew a couple lines on here to show you this. This is actually the micro gold futures contract for June of 2024. So I'm interested in taking a position in gold futures. Because of my account size of $50,000, I'm going to be trading the micro gold contracts. So the first thing I want to do is determine where I want to enter the market and, of course, where my stop loss would be. So here you see I've drawn some lines. The green bar here is the daily low of today's candle. And if the price drops below that daily low, I would like to take a position in this market. I would like to sell a contract in this case because I want to profit from the market going down. Now, before I put that order in, I definitely recommend you do a bracket order, and that means that you're going to put both a stop loss, how far do you want the market to rise before you actually get out of that contract, and also how far does the market go down before you take profits. So let's go ahead and start with this example. So the first thing I want to do is figure out my entry price, and it's the daily low here, and that's 22.86.3. I'm going to take that value. I'm going to first select the gold, micro gold futures contracts right here. I'm going to go short, so I'm going to select that, and I'm going to put that entry price in there, 22.86.3. Now I also want to determine my stop loss, and that's up here at the top. That's the daily high of today's candle, and that value is 2350.0. So 2350.0. I'm going to go ahead and put that in here. Now I skipped the target profit for right now. What I'm going to do is I'm going to go ahead and let the futures calculator calculate that profit target for me. And I want to select a 1 to 3 profit target, meaning whatever I risk, for every dollar I risk, my hope is for a potential profit of 3 times that dollar. So if I click that link, it's going to pre-fill that amount right here, $22.95, with my profit target. All right, now that I have that information entered, I want to figure out how many contracts, futures contracts in that market I can afford to take based on my amount of risk. So what I'm going to do is going to go ahead and calculate with one contract in there, what would that look like? So for that trade, I have a potential loss of $637, and I have a potential profit of $1,911. So that's 1 to 3. For every 600 I'm risking, there's 1,800 or so that I'm getting back. All right, so let's take a look at how my risk stacks up. You can see here that here is the percentage of my portfolio, which is my $50,000 account, that I would be risking on this trade. If I took one contract, I would be risking 2%. You can see here that I can't really put 2 contracts on because that would be a 3% risk. Typically with Insider Week, we like to keep our risk at about 2% or less per trade, per position that we're going to take. So in this case, really all I can do with this account size is buy one contract based on this risk of $637. So what I'm going to go ahead and do is take that profit number that I don't have on my chart yet. I'm going to go back over to my chart. I'm going to go ahead and create a bracket order here just to show you how this works. I'm going to go put the profit target in. And I'm going to put the entry in. And I'm going to put the stop in. These are all the numbers from the futures calculator. Click OK. And you can see here that if I move this over on top, that is exactly the same setup that I wanted to use. So I'll enter the market here. I'll exit the market down here if the price keeps falling. And of course, if the price goes up, I will exit with a loss up here. So you can see here, if I hover over this, the risk reward ratio is 3, which is 3 to 1, which corresponds with the profit of 3 to 1 that I clicked here. So if you had a brokerage connected to your charting application, you could create a limit order like in this case. And you can see I have 1 unit. It gives me the risk here based on the information I put in there. And I can click sell. And then what it does is set that order up to be placed as soon as that market reaches that level. So that's how you would set up and use a futures calculator to determine your risk. I hope this helps you. And again, remember, the most important thing in trading is your risk and money management. So please pay careful attention to that. Please use this calculator and it will help you stay out of trouble with your trading. Thank you.